Hello again, Steve here, and I'm going to muse a little bit about the whole stock market thing. And you might ask, well, what do I have to say about it? What's my qualification? What the heck have I ever done with the stock market? Well, honestly, not a whole lot, although I am a bit of a thinker as to what it is that motivates people and why it is that these things go up cyclically and so on. And a lot of it has to do, especially lately, with government tinkering and Federal Reserve banks and whatever. But there is, if one looks at charts, there's certain things that can be gleaned, can be learned from there. And there's a guy that I know years ago, and I still know of him. I haven't been in contact with him quite a while ago. I knew him when I was back in Vancouver. But he was a very successful investor. I mean, it took him a long time of trial and tribulation, and he did study a lot about it. But he ended up being very successful. And he gave me a chart which he really valued. He gave me a copy of it years ago. It's an old chart that was actually edited by him at the end. And I'll just read what it says here. And it's probably, you can find this on the internet. I haven't actually looked, so maybe it's old news. I don't know. I should have a look, I guess. So I'll just read what's on it here. It's very interesting, actually. Okay, so it says, okay, first of all, I'll say, no, I'm not sure who actually reprinted this thing, because it just says we have reprinted. So it starts out, we have reprinted a remarkable chart which was found in an old desk in Philadelphia in 1902. The author is unknown. The original chart was very much discolored by age, and the desk in which it was found was at least 35 to 40 years old. We have every reason to believe that this chart was made during the Civil War, or possibly before. Check this chart against your own experience. It is surprising how closely the unknown author hit such major depressions as 1873, 1894, and the 1929 stock market crash, and the current slumping economy. So we'll get to where that current time frame we're talking about is. The chart shows that we can expect steady upward trends from 1982 in the view of the immediate future with confidence and optimism. Now it does also show, interestingly enough, 1982 as a bottom. And if you look, what's interesting about this chart is that if you take up, just dial in any Dow Jones Industrial 100-year cycle graph chart, you can see that a lot of the highs and lows are the same as on this one. Now, if you can freeze frame this somehow and just have a look at it, it's very interesting. Now, it says on the bottom here, so basically it's like a sawtooth, right? So you've got a short-term high, and then it goes down, right? So you have twice as many highs as you have major lows. Then you have this central. So it's kind of a, so it's, they categorize these three lines as the top line being years of good times, high prices, time to sell stocks and valuables of all kinds. That would be the very top line. The middle line is years of hard times and low prices, time to buy. Right? And then the real bottoms that happen around 20 years or so, by the look of it. Years in which panics have occurred and will occur again. And it says on the bottom also here that the above chart was a supplement to an address given by Mr. R.D. Phelan, General Manager of Hudson Bay Mining and Smelting Company, before the annual meeting of the Employers Association of Manitoba at Winnipeg, March 2nd, 1933. The chart was given to Grey News by retired General Manager of UGG, Louis Driscoll. Now, I don't know what that really means, but it goes back a ways anyways. We're talking that it's an old chart. Now, what's interesting is that the chart ended up at just past 1995. And my friend, he extrapolated it out And now he did this in 1990. If you look here, that's his writing. That's my friend's writing. Additional lines added 1990 by R. Jennings. And this, so he's charted it so that 1997 is a top, and then 1999 is a bottom. And then interestingly enough, back in 1990, he charted this out to have a top at 2006. And we all know that that's not far off the 2007 mark, right? And even the mark, even the 1999 is not far off. I'm just looking at a chart here in front of me that shows year 2000. Year 2000 there was a high. And he says, sorry, he's got 97 as a high. It's only a couple of years off. And then forward to year 2002. And he's got 1999. But then from there, it basically sawtooths up to 2000. If I look here, if I go across here, I see 2007 as a high. He's got it as 2006 as a high. So what I did is I went through, I just did it again. I just put dots in pencil. You can't really see them probably. But I extrapolated it out. I averaged out the time distances between all these. And what I found was that on the top, there's basically a 6-year difference. The top to the midpoint, and then the top to the bottom, or from the midpoint to the top again, about 6 years. A 12-year spread for it to go from the top to the midpoint to up again. Which brings us to 2018, according to this chart. And that's very interesting because we're starting to see a break in the whole thing. Now, because in the stock market's starting to crack, right? And of course, a lot of people say, okay, well, it crashed, over the last week, and there's a recovery starting to happen. Well, that's just inherent. It seems like across nature, this seems to happen. Like I was looking at a chart of Bitcoin and how it went up to 2,600, and then it crashed, and then very shortly after it crashed, it actually corrected for a bit, and then it went down again. There's if you look at charts, there's always this sawtooth effect that happens, right? Even right here at my own channel, I looked at I had a video go viral for me. I mean, viral for me is like 1,500 views, man, like pretty crazy. But you know what? So my chart of views was almost exactly like Bitcoin. It was going like this, and then it went up, up, and up, and up, and up, and up, and then it peaked, and then it fell, and then as soon as it started to fall, it corrected again and started going up a bit, and then it went down, and then it and then it went up a couple times as it went down. But this is how it works. So, and what I've noticed is that when you have an up, if each time it breaks the last peak, the run isn't done yet. But once you go to a peak, and then you break that peak, and then your subsequent peaks, if they start down and they're not making it past the last peak or the high peak, it's probably a downtrend. So look for this, I would say. Now, here's another question is, how does this affect what's going on? I mean, is this good or is this bad for the whole Trump thing and the freedom run? Well, two ways of looking at it, really. I mean, in some ways, a stock market crash is a wet dream for the Democrats. Because, of course, they're going to blame it on Trump, right? They're going to blame it on his tax cuts and so on, whereas, it's probably triggered by the FISA thing more than anything. But Janet Yellen walking out the door and, pulling some plug as she went. I don't know, something could have been going on because it's not at all a free market anymore. It's a communist money system, so much manipulation can go on. But I see it as kind of it goes both ways, and Trump being the brilliant strategist as he is, I think if people try to mess with him too much, unless they kill him, They don't know who they're messing with. And because I think that he can't really lose either way. I mean, if things keep going, if it is just a correction and it keeps on going for a while, well, then he gets to say, yay, the stock market's still doing great. And they can't get him on that. But if it tanks, they're going to blame him on it. Even though the entire time that Obama was in, they'd say, well, the only problem, the reason there's a bad economy is because he inherited the Bush economy. That's why the economy is the shits. But now, of course, they won't be saying the reason the economy is bad if it tanks is because of Obama. And all they'll say it's because of Trump. So it's, they like to have it both ways in favor, right? That's the nature of that game. And so they would like it in some ways because they can release the batshit crazies to the streets, right? They can let them run wild and tear the place up and create all kinds of turmoil, which is wonderful for authoritarians because then they get to march in their jackboots and put stuff down. Like they'll demand the jackboots come in and stifle and declare martial law or something like that. Because when this goes down to the bottom line again, I mean, every one of these is worse than the time before, and it's going to be something. Now, how could this be positive if it was to go for a shitter? Well, Trump's talked about draining the swamp over and over and over again. And if push comes to shove, and it's really, really serious, he won't be negotiating anymore, probably. Because I think Trump backed into a corner, is the kind of guy, he's an alpha male. He's going to do what he's got to do. He'll be nice, power of positive thinking. He'll be nice as long as he can. If he really has to take charge, though, I think that there will come a time when the hatchet's going to have to come out, and lots of things can get cut, right? He can get rid of Amtrak. He can curtail foreign wars. He can become the general he has to be, right? On the border, for example. He can get rid of the Department of Education. He can get rid of the Federal Reserve. He can get rid of all kinds of sort of these, when there's a shutdown, they send all the non-essentials home because they're not essential, so what are they there for? So he can get rid of all the non-essentials because it's a state of emergency. It's austerity, right? And that would create an amazing, amazing rebound. Let's put it this way. If and when this economic catastrophe happens, of all the people who are available to run that behemoth, that authoritarian organization called the United States south of the border, I hope that somebody as competent as Trump and as confident as Trump is at the helm, and that experienced as well. But I guess that'll remain to be seen. I hope this stuff was helpful. Once again, musing on what's going on. How can this, help us in our own lives? Well, when these sort of things happen, it reminds us we should have our act together, right? We should be working on ourselves to have the best health, physical health that we can have, the best mental health that we can have, the best emotional health that we can have, great relationships around us, and work on our skills, our skill sets, basic stuff, communication skills, our ability to build stuff, to produce for the free market. All of these things, when there's hard times, what do they say? Hard times make strong men. Right? Strong women too, of course, but that was the old saying. And we go to the gym to deliberately create a hard time for our body, So sometimes when we have such an easy time, we put on the silk slippers and just be lazy, complacent, and believe a whole bunch of bullshit. Whereas if we have some hard times once in a while, we will come back together, hopefully, work together, and become stronger, and advance as a species stronger than before. Steve here again, great chatting. If you like anything that I'm doing here, please like, subscribe, and share. My understanding is that's how, you know, people get to the rankings work. If the algorithms see that people are liking and sharing and commenting, then it's a positive thing, and it'll show up in more people's feeds. That's all I ask. I'm not asking for cash, Bitcoin, anything else. Just like, share, subscribe, and I hope to hear from you in one of the comments. Steve here again, great chatting. Talk again soon. Bye for now.